Hello and welcome. Allison here. Looking forward to presenting the weekly update. What is going on with the market and what are the specific stocks that we are looking to make money with and the exact strategies that we're going to utilize. So let's get into this. We trade the stock market. We need to know what the overall market is doing first. Then we can drill down into some specific ideas to actually make money for this week. So let's look at the overall market first. Right now, the skew, which is the perceived risk of a 2 standard deviation move or more to the downside, in other words, a market crash, anything above 135 is bearish. Okay, that means that the smart money is worried about a market crash. Now we are at 148 now, so that is still very bearish. However, not that long ago, back on the 25th of June, we were as high as 170. So certainly some of that fear has come out of the market, but we are still bearish using that market internal. And that's really what we're doing now, getting an idea of market internals, what's going on under the hood, so to speak. Now, the next thing we'll look at is the combined put-call ratio. Now, 90% of the time, this is neutral, which causes a lot of people to dismiss it, but it is a very important market internal that we need to look at. You know, if everyone loves stocks, if everyone is enjoying buying stocks right now, and at some point, everyone who wanted to buy a stock has now bought a stock. What happens? The stock drifts lower, starts triggering out stops, and it starts to get too lopsided in one particular direction. Too many people buying. Everyone who wanted to buy has now bought. Starts getting lopsided and starts moving down, triggering stops. If a market gets too lopsided, then the entire stock market can fall. It can fall very quickly. Think back to the NASDAQ crash of 2000. Now, the market can never escape this cycle, and really that's what we're doing, seeing whether the market is too lopsided to the upside right now. And these market internals will help us determine that. So the combined put-call ratio, if we look at this, so we look at the 10-day moving average, so this blue line here, right now we can see that that is 0.86. So what does that mean, Sean? Well, anything that is 0.75 or very close to it or lower shows that everyone's bullish and a little bit too comfortably bullish. This is an insanity point. You would look for the markets to roll over and start moving down. So that would be a bearish sign if it was 0.75 or lower. Now, if it was 1.0 or higher, then you would be looking for too much fear in the market. Everyone's hedged or everyone is short. There's no one left to sell. This also is an insanity point, and you would look for the markets to bottom and start moving higher. So you know, start to bottom out and start to move higher, right? So that's 1.0 or higher. But a neutral reading would be between 0.8 and 0.95, which is exactly where we are right now. So it is neutral right now, but I gave you those metrics, 0.75 or close to it or lower. That would be bearish. Anything 1.0 or higher would be very, very bullish, okay? And anything in between 0.80 and 0.95 is neutral. So you'll know now how to utilize this combined put-call ratio. You simply go to stockcharts.com, type in $CPC, and you'll then be able to measure that market internal, right? Learning something. Now, the other one here is, as far as measuring market internals, is the daily SPX index put-call ratio. Now, this is going to help us determine whether there is excessive put buying, excessive put option buying, or excessive call option buying, right? Now, anything that is 1.75 or lower shows excessive call buying. So that is a bearish sign. Look for the markets to move down. Anything 2.75 or higher shows excessive put buying, looking for the markets to bottom out and move higher, right? So 2.75-ish or higher is bullish. 1.75 or lower is bearish, looking for the markets to move down. So anything in between that obviously would be neutral, which is where we find ourselves right now. But again, go to Y charts, type that in, and you'll be able to measure that as well and keep an eye on that also. Another very important market internal. So right now, what am I trying to say? The market internals are saying that we are neutral. We are not strongly bearish like we have been. We are now in a neutral reading. Now, obviously, we need to look at the charts because there's nothing more important than the actual charts and price action. Because price action is the truth, but looking at these market internals can help us as well. Now, as far as economic news goes, we have CPI or inflation coming out before the market opens tomorrow. That will be important. A lot of traders will be keying off that, and jobless claims on Thursday. They're the main two news items for this week. Now, news items for last week showed us that job openings surged to a new record, actually, above the historic 10 million level. Now, that was suggesting that the job market recovery could actually speed up in the coming months. So that is definitely something that is, obviously good for economically sensitive stocks, and certainly would bode well overall for the markets. Now, let's look at the actual market itself. So the SPX, the best gauge of the overall US stock market, certainly been in an uptrend. It's been using that 50-day moving average, as you can see, as a very strong support level, and we are still respecting that as we speak. But if we look at the trend line that I drew all the way back to March 2020, trust me, many traders are looking at this trend line. Is the SPX, in other words, the overall market, going to respect that trend line? And we can see right now that it still is, right? I want to see 2 days below that. So one daily close below that trend line, then another confirmation day. We saw a small close here, and then the next day straight back up above. Same thing here. So we haven't seen 2 consecutive closing days below this trend line, going all the way back to when it started in March 2020. So it's still respecting that trend line. And when we look at our 92% accurate opening range, which is set on the first trading day of the month and the third Friday of the month. So if we have a look here, this particular day here is the first trading day of the month, which was the 2nd of August. We put the high and the low of that day, and that represents the opening range until when? The third Friday of the month, okay? Monthly options expiry. So right now, anything above 422.18 on the SPX is bullish, in showing the market is in bullish opening range mode. Right now, we broke above that right there on the 5th of August, and we've remained above that level there, okay, as you can see. So we're above that significant trend line, we're above the opening range, so you would have to say right now we are in bullish mode. Not overly bullish, but we are technically in bullish mode. If we look at the workspace to get an idea of what the overall market is doing, all the indexes in one snapshot, we can see that the Nasdaq is still respecting the 21 EMA on the daily chart. Anything above the 21 EMA is typically bullish, and that has been acting as a very nice level of support for the Nasdaq, and it's still looking strong. Russell 2000, economically sensitive Russell 2000, has been going sideways in a trading range, not really doing a lot as we speak. We already spoke about the SPX, and the Dow Jones Industrial, the oldest of the indexes, is in a sideways trading range right now. So we'll keep an eye on that. And the transports are certainly in a downtrend, as you can see here. Now, the transports will lead the market by several weeks. So if we continue to see this trend to the downside here, as we're seeing right now, eventually the markets will start to follow suit. So this is something we want to keep a very close eye on if this continues. Now, the other thing that we look at to get an idea of the overall market is the relationship or the ratio between gold and lumber. If we get gold moving up dramatically and lumber really selling off, then that would be another warning sign that the market's likely to move down, and that's not what we're seeing. In fact, we've seen gold move down dramatically recently. So it'll be interesting to see whether it bounces off this trend line or it continues to move down. But yeah, again, that's showing that the market is more neutral to bullish than anything else. So looking at the sectors right now, we saw that crude oil moved down to 3-week lows, and copper and other growth sensitive commodities also fell. That's part of the reason why we saw energy sector down 1.41%. Anything above 1% is significant, so that was certainly down substantially. All the other major sectors that we look at were flat, right? Didn't really do much at all, except for biotech. Now, biotech was up 2.38%. Again, anything above 1% up or down is significant. So we're really starting to see biotech break out. And one of the stocks that I'm looking at right now to place a trade on is Pfizer. Now, Pfizer moving up strongly here. You can see that it is now broken out of this bull flag here. Okay, so we have a bull flag that it's just broken out of. So we've got a small bull flag there it's broken out of. That is obviously bullish. If we look at the weekly chart, you can see that from last week we have now made another high, right? That is bullish as well, continuing to see a strong move to the upside. And then we look here at the monthly chart, and we've now taken out this prior pivot point, or this prior high here, and it looks pretty bullish to me. So I will take a position in Pfizer now, looking for this to continue to move to the upside. My stop would be the prior low here, so it would be right there. So if I just use this horizontal tool, it would be right there. So my stop would be at around 44.63. Okay, so if we get a close below 44.63, then I would exit the trade. But at this point, I'm going to take a bullish trade here on Pfizer. Now, another stock that I'm looking to get into to the upside, I'll just give you guys as much as I can here. If we go to Earnings Whispers and we look at the prior earnings report, let's have a look here at Apple, and you can see that the actual earnings, $1.30 earnings per share and revenue of $81.4 billion, was much higher than the consensus, which was $1 earnings per share and $72.9 billion in revenue. So revenue grew 36.4%, and Apple beat on both earnings per share and revenue, and plenty of cash, very fundamentally sound company. The other thing to understand about Apple is that when you look at seasonality, in other words, you go back and you have a look at what has Apple done at this time of year over a period of time. Okay, so one of the ones that one of the seasonal bits of data that I found very interesting is that Apple, ever since 1984, has gone up 78% of the time over the next few weeks. In fact, over the next 12 days. Okay, so over the next 2 weeks, 78% of the time, Apple has moved higher. Now, that's a very high percentage, especially when it's based on nearly 40 years of data. Now, the average move up is 6.26%. So that is very, very interesting. So that, based on seasonality, Apple tends to move up this time of year as well. So we can see a little bit sideways right now. We look at the weekly chart. We've taken out this prior high here, or sitting right on that prior high, just above it right now. And if we look at the monthly, it's very interesting. If we have a look here at the monthly, we've had a move here which gives us an interesting pattern, which is one of my most favorite patterns, which is the bull flag. Okay, so we've got a bull flag here on Apple. It's now broken out of that on the monthly chart. So, this move, I suppose, really, where could you take it from? I suppose breaking here above sort of the 80 level. So if you sort of drew your pole from, say, 80 to around 130, 133, say 130, make it easy, $50 move from there, taking you to, say, 180. So that'd be very interesting based on a monthly chart. So obviously that would take a lot longer time period to work itself out. But I do like Apple for all those reasons. What I would do with Apple is I would set up a very high probability trade on this. Now, my trade would be utilizing a call vertical debit spread, which is just a fancy way of saying I'm going to sell an option and buy an option at the same time with the same expiry, same amount of contracts. This is a fixed limited loss and a fixed limited profit as well. Now, with this particular trade, I would probably take it out to the September contract, the monthly contract, the 17th of the 9th. I could sell the 150 and buy the 145 for a debit there of $2.28 with a potential upside of $2.72. So I could make a potentially well over 100% return on my risk on this trade, and all this stock has to do over the next sort of 5 weeks or so is move above 150. Now right now it's at 146 and 9 cents. Does Apple, based on the seasonality, based on the monthly chart breaking out of the bull flag, based on the actual price action, the great earnings, all of those things I mentioned, would this have the ability in the next 5 weeks to move above 150 and potentially give us a well over 100% return? I believe it could. So I'm going to set up a position on that for those reasons. Another one would be Microsoft. I like the look of Microsoft, looking like it wants to break out here from this sort of small resistance level right now at about 290. So we'll be keeping a close eye on this one. You can see here on the weekly just continuing to move higher, making higher highs. And on the monthly, another move to the upside. So this is really looking very, very strong right now. I like the look of this. Again, I would set up a call debit spread, vertical spread on this one. I would probably sell the $2.95 and buy the $2.90 for a limit debit of only $2.05 with a potential upside of $2.95. So I could make a very good return on this. Now, if I utilize a stop on this and sort of take like $100 of risk per spread that I'm buying, I could potentially make almost a 300% return on this. So if it does what, Sean, gets above 295. So I like the look of this one as well. I'm going to set up a position here also, and they are the couple of positions that I'm looking to get into. Last week I mentioned Lulu. Lulu right now we are up just under 13% in a week. So 13%, 12.3% to be exact, 12.3% profit in this trade that we have here, this call debit vertical spread that we have. We don't always do that strategy or utilize that strategy, but we did here. And looking for this to have a run up until earnings, which would be in early September. We're up around 12.3%. Some of the members may take that. That's a very good profit in a week, right? If you can make 12.3% every week, you'd be happy. Or there are some other members that will take some of the trade off and look for it to get above that 420, which is what we were hoping for in the next sort of 2 or 3 weeks. So that's what's going on with that one. I mentioned that last week. Bitcoin, some people asking me about Bitcoin. Well, we did break this prior pivot here. Okay, so we've broken this level now. We've got about above that 42,500 level. Where could it go now? Probably back to this level here, around 50,000. Could very easily go to 50,000. If it breaks that, then testing highs again of around 64,000. Or we could go up to 50 and then retrace straight back down to the 42.5. But right now, we have broken above that. We've got consecutive days closing above that 42,500 resistance level. That is confirmation that we could very easily go up and test 50,000 here with Bitcoin. We've been doing very well with another stock that we're in right now, which is Riot. If I just take that off for a second. Riot has done very well for us. We've now broken out nicely. It was up over 8% just last night. So we're going to make a very nice profit on this one, doing very nicely. It does have earnings coming up, so we do have a put option for protection on this one as well. And we've utilized a different strategy on this one, but this one is looking really good for us at this point. So there are a couple of positions that we've got on. That's what I'm looking to make money with over the next week or perhaps several weeks. And that's my view on the market right now. Probably slightly bullish would be my view right now. Many companies are crushing their earnings, and that is going to stop this market falling as we speak. But looking at the market internals, we would have to say, and the charts obviously, we are more bullish than anything else. So neutral to bullish would be my feeling there for those reasons. All right, I hope you learned something. I hope you found some ideas. I will talk to you again next week. Thank you so much for listening. My name's Sean Allison. All the best and bye for now.